Welcome, dear traders. The stock market has been swept by a new wave of sell-offs due to inflation fears and mounting market uncertainty. Investors are alert to even the most insignificant news on the stock market prospects. During the earnings season, one of the main drivers for stocks is the quarterly results of U.S. companies. Yesterday, the U.S. market experienced another sell-off. Some analysts compared it to Black Monday of 1987. Following a nasty dive on Wall Street, Asian stock markets also began to decrease. After Tuesday's rally, the sell-off of risk assets yesterday came as an unpleasant surprise to investors. Black Wednesday occurred due to Tuesday's events when U.S. largest retailer Walmart warned about a drop in a gross margin. The company's shares fell by 11.4%. Investors seemed to believe that this was just one negative report and others could be better. However, on Wednesday, another U.S. retail giant, Target, reported a decrease in profit. The quarterly profit of the sixth largest U.S. retailer halved because of rising costs. Investors rushed to get rid of Target shares, and this sank by 25% in the worst session since the Black Monday crash on October 19, 1987. The S&P 500 and Dow Jones indexes slumped by 4%, logging the sharpest decline since June 2020, amid target woes. The NASDAQ index, as usual, incurred the biggest losses, dropping by 4.73%. Bear in mind that the first 5 months of this year have been quite challenging for risk assets, and their prospects remain rather grim. New waves of a sell-off may continue as long as economic and political uncertainty worldwide persists. Some analysts advise traders to brace for the fact that the stock market will remain extremely volatile for some time. Let's not forget about the main driver of the stock and currency markets, the monetary policy tightening cycle by world central banks. Traders realize that the era of a loose monetary policy is over and that the shift to tight monetary policy may derail economic growth. Besides, neither the Fed nor the regulators of other countries have such a transition experience. The Fed may be alarmed by negative housing starts data published on Wednesday. The housing sector is the most sensitive to changes in key rates. The US dollar, on the contrary, enjoys high demand as a safe haven asset amid economic headwinds. Yesterday's stock market crash halted its 3-day losing streak. As a result, the US dollar index rose by more than 0.5% to 104 against its main rivals. In today's Asian session, the greenback slowed its growth, moving in the range of 103.58 and 103.88. However, it's likely to take a break before a new climb, so it may advance in the US trade from the 103.50 level of the Asian session. Risk aversion boosted the Japanese currency, and yesterday the dollar-yen pair tumbled to a new intraday low located below the psychologically important level of 129. Concerns about a slowdown in global economic growth helped the yen regain its status of a safe haven currency. As a result, traders added it to the portfolios amid the risk aversion. Judging by the movements on the chart, the pressure on the pair remained in the Asian session, yet the yen is still climbing. The pair was moving in the upward channel of 127.82 and 128.94. At the time of preparing material for this video, it was trading at 127.90. Perhaps the strengthening of the national currency will be able to steer the Japanese economy. The latest economic reports unveiled the ninth consecutive monthly trade deficit. Apart from that, import prices have been hovering at peaks for the 13th month in a row. Against the backdrop of steady domestic demand, a sharp rise in commodity prices and a weak yen, costs for both consumers and businesses are steadily increasing. The Australian economy is expanding steadily. Besides, its prospects are quite bright. The jobs report released today revealed the lowest unemployment rate in the history of the monthly survey. In April 2022, the jobless rate declined to 3.9%. It fuels optimism among traders, especially given a steady recovery of the country's economy after the pandemic. Nevertheless, Australia's stock market also shed losses following a drop on Wall Street despite positive macro stats. The Australian dollar, which slipped on Wednesday after the weak labour market report, managed to regain ground. The AUD USD pair approached 0.6988 in the Asian session. Taking into account a strong bullish bias, the pair is likely to rise higher, moving from the support level of 0.6952 to the resistance level of 0.7025. And that's all for now. Feel free to leave your questions down below. Our analysts will be happy to answer them. Subscribe to our channel and stay up to date with the latest market news. See you soon.